right. Good morning, everyone. Tim Davis coming to you guys with a very quick market update or market review. Today is Monday. It's about almost 7 a.m. June 24th, 2024. I'm going to start off by taking a close look up at the Dow Jones Industrial Average. Looking at the Dow, one thing I want to point out with the Dow is that the Dow has been trading in a range now since April, I want to say, between that 4,000 level down to about 3,700. So, and it looks like that range could continue for a bit. So in this range between the 37,000 to 4,000 level, 37,000 to 40,000 level, something like the Dow has been trading in that range for a few months now. And eventually this range, I think, is going to find a way to give way. Right now, if we look temporarily, this is a weekly chart we're looking at. And I want to point out some current action. Looks like the Dow is on a weekly chart. Looks like the Dow is attempting to go back to the upper part of that range. So let's see how this week pans out. But like the Dow wants to go back towards the upper part of that range. But anywhere between here and that range, anything can happen. We can get an automatic reversal back to the bottom of the range or what have we. But it looks like that is the range that the Dow has been pretty much trading in since the I say in the part of April, in the part of May. I'm sorry, at the end of part of March. So between March and July, like we've been stuck in this range with the Dow Jones Industrial Average bouncing between 3,700, 37,000 up to 40,000. So that's something to pay close attention to. And we take a quick glance at a current daily chart of the Dow Jones. Again, you see that wide range that we've just been bouncing around in for the past few months. And right now, it's like we are trying to head back up towards the top of that range. But if you look at the CCI, look below, it looks like we have a wide divergence between the two oscillating indicators within that CCI. There's a wide divergence between the green and green line and the beige line, I will call it. And normally that shows you sign of exhaustion to that, and in one way or the other, like we've been trending higher. So we could be starting to see some type of sign of exhaustion where this could start to reverse lower. So that's something to pay close attention to as we travel in the beginning of this trading week, start the beginning of this trading week. All right, let's switch to the S&P 500. All right, here's a look at the S&P 500. Again, this is a daily chart. Looking at, we're at the top of this range. We got up to as high as 5,500 last week. So a little bit over 5,000, 5,500, 5,500 in the S&P on last week. And it's like we hit another ceiling here as well. If we look at here in the oscillators, looks below, look at the CCI, looks like it's starting to hinge lower already. Wasn't overbought territory, looks like it's starting to hinge lower already. For stochastics, like it is in overbought territory, but maybe starting to hinge lower. Whereas percentage wasn't overbought territory, is starting to hinge lower on the daily. Look at the weekly chart. Shows definitely in overbought territory. Look at the TTM squeeze. It was coming down, showing some weakness. I feel like it's trying to hold on to some strength. Look at these last two light blue bars over the past 2 weeks. But you look at the full stochastics, it's definitely in the overbought territory. Like it may be starting to get exhausted. CCI is what I really want to hone on right at the bottom here. Your screen, that the wide divergence between the D and the K line, or the green line and the beige line. There's a wide divergence there. It's like we could be starting to close that gap and start to trend lower in the near future. So that's something to pay close attention to on the S&P 500. It is appearing it is definitely in overbought territory on the weekly charts, like it is probably starting to get exhausted. Let's take a look at the NASDAQ. And the NASDAQ has been the outlier. It's been one of the areas of strength, but I think it's starting to form some starting to see some chinks or some openings within its armor. Here's a weekly chart of the Nasdaq. Look at that red candle, almost like an exhaustion candle that we seen last week. So we got this long wick, very, very short body on last week, showing signs that we have possibly run into a wall on the Nasdaq on the weekly chart. So that's how we're paying very close attention to on this week. Let's see how this Nasdaq performs. Look at the full stochastics on the weekly chart. Like it's starting to show signs of exhaustion after being overbought for quite a bit. Whereas percentage, like it's starting to hinge lower. CCI, like it's trying to start to hinge lower. Look at a quick daily chart. Right to the CCI, see it is already showing a crossover where the green is crossed below the beige line, signaling a possible sell signal. And oscillators starting to trend lower there. Oscillators starting to trend lower on the Williams percentage, and oscillators starting to hinge lower on full stochastics as well. With price action showing you some reversal signs after making a move up to above 17,000, almost 18,000. Then we got a big red candle on Thursday, and we're starting to trend lower as well, starting to continue lower as well. So that's something to pay close attention to as it relates to the Dow. I mean, as it relates to the NASDAQ. One other thing I want to point out real quick when we're talking about the NASDAQ, take a look at NVIDIA, which has been one of the strongholds of the NASDAQ, but it's showing signs of cracking on last week as well. So that is another telltale sign that the markets could be in store for some type of pullback here in the near future. Here's a daily chart of NVIDIA. Got it to as high as 140 on last week, and it made an immediate drop off from that point, heading back down to its 20-day moving average. With the volume, the selling pressure and the volume increasing on the way down, that's normally signs of possible more downside to come. So we were as high as 140 on last week, and then we dropped the end of the week around about 127, 126. Sell signs showing in the full stochastics that you see the oscillators starting to trend lower out of the overbought territory, as well as Williams percentage oscillators trending lower out of overbought. CCI oscillators also trending lower out of overbought. Look at weekly chart on NVIDIA. Look at the CCI. It's almost starting to cross on a weekly chart with a sell signal. CCI and CCI oscillator is about to cross with a sell signal on NVIDIA. So, and you look at that big red candle on NVIDIA last week. So that could be signs that there's definitely some cracks starting to form in the NASDAQ, and the overall market will probably follow as well. All right. All right, let's take a look at the Russell real quick. Here's a Russell. It's been the weakest link out of them all. Every time it tries to make a run, it runs into this wall of resistance. So right here around this 2135 is where the Russell has been running into a wall of resistance. And every time we would head back down towards this 200-day moving average, we get a bounce. So we're close to that 200-day moving average. So do we continue to get a bounce here and a quick reversal? That's what I believe we could see. So we have to wait and see what happens. But right now we're hovering right around this 2000 level. So this 2000 level has been a area of support for a while. So let's see how price action reacts to that level as we trade throughout this week. Oscillators and CCI is still trending lower. So that is a negative for the IWM or for the Russell. The oscillators and the CCI is definitely still trending lower. And we're still in this range pattern here. So have to wait and see what happens, but there's a lot of weakness in overall market in general. All right, and let's take a look at quick daily chart on the Russell, and as you can see, price action has been hovering right around the 50-day moving average. It's been trying to get above it, but it's been struggling to do so on daily chart. So that's something to keep in mind, the Russell. One more thing we'll take a glance at, and that's the VIX. And if we look at the VIX, it's starting to show some signs of life. And what I want to point out here with the VIX, this is a daily chart. Look at the oscillators and the full stochastics. It's starting to trend higher in a major way. Rand's percent is starting to trend higher. There's a wide divergence between the green line and the beige line and the CCI as it was trending higher. So we could see some pullback here, but it could be just a pullback setting up for higher prices in the VIX. So that's something to look forward to. Or something to pay close attention to as the VIX starts to run into a little bit of resistance here, right around its 20 period, right around this 50-day moving average and 200-day. If we ever get a break above this 200-day, folks, we're going to see the VIX really start to take off. So pay close attention to moves in the VIX throughout this week and definitely by the end of this week. All right, folks, that's all I have for you guys. Hopefully this information you guys can use. Until the next video, it's Tim Davis signing off. Enjoy the rest of your day and the rest of your trading week.